Adani Enterprise is up 2.5%, and ITC as well has made a decent move today along with Tata Steel. So actually metals is making a decent comeback, although only sporadically. So let's see which way the move heads from here. There's of course Granules, Persistent, GMR Infra, which from the broader markets are also looking pretty lively too. Naresh, what's your sense on whether or not we can see metals now participate in the market move?
So in terms of metals, I would rather be interested in more in mining. So NMDC looks very promising. In terms of metals, the preference remains the same. Jindal Steel, which looks interesting, clearly a outperformer in the whole segment. There could be some bounce back in SAIL and Nalco given that they are oversold in the near term. But I would still stick with NMDC as the top pick, and next would be Jindal Steel. It's the second level specialty steel which is doing well. Kalyani Steel, which we looked at a few weeks back, has done really well. There is a Vardhaman specialty steel which has started forming up in the last couple of sessions. So would be focusing more on the mid cap, small cap side of it, more on specialty steel rather than the core steel companies or core metal companies. The mining ones still look interesting, so I would be focusing on NMDC as the top bet.
Bharti, very, very interesting. You don't normally see Bharti, in a sense, going against the basic mood of the market. Dr. Reddy, again, very interesting. Pharma is having a good time. It's really having a good time. Granules, Laurus, Apollo, Pharmaceutical, that's the classification. Lupin, Syngene, Biocon, and then you got good old Aurobindo Pharma. It's having a good day. Mayuresh Joshi, what has turned for Pharma? Why is Pharma so much in demand? I mean, haven't everybody learned from the mistakes of Pharma? Every 2-3 years, Pharma becomes more like a seasonal play. And then when the tide turns, everybody says we will not go back to Pharma. Then the tide turns again. Then they go back. Then they say we will not go back. Then they go again. Pharma में पैसा तो बनता नहीं है.
But if you are at the right time, Nikunj, I think money can be made. I think a lot of underperformance in pharma was very, very evident a few quarters back. And I think that is precisely when pharma stocks have probably taken off. I think 2-3 factors which are abetting them in a substantial fashion, and to a certain extent structurally as well. One, I think pricing issues which have languished and beleaguered their balance sheets for a long time. Pricing issues is no longer a concern because the kind of price cuts that they used to take on the generic part of their portfolio, I think a lot of specialty launches are happening and are expected to get launched across pharma companies in the next few quarters and years as we speak, which gives them better margin stability. The second element obviously is a lot of FDA concerns that a lot of the pharma companies had. And as clearances are coming through, the entire specialty pipeline, both through ANDAs and FTFs, which will get filed, will provide better comfort in terms of better margin products coming through from their own facilities, where a large part of the backward integration for most molecules, as an example for Dr. Reddy's, is expected to be conditioned in the next few quarters, will probably aid earnings growth. And the third element obviously is in a time when cyclicality is probably ruling the market and when there is a lot of macro uncertainty, I think pharma probably comes to the rescue. So in my opinion, I think a lot of these factors came at play for the sector as a whole. And numbers obviously have been turning better over the next few quarters. The expectation obviously is with all these factors, numbers will continue to do well as we head into the second half and the next couple of financial years as well.
Lots of stocks are jumping above the 200 DMA, variety of them. JSW Steel, Dr. Reddy, JS, Adani Ports. It's turning out to be, Naresh, a good, solid day of comeback because it's not like a rally has been led by Reliance. It's not that, HDFC Bank has come back. It is ONGC above 200 DMA, Dr. Reddy, Bajaj Finance, JSW Steel. It's turning out to be a very impressive session, Naresh.
Yeah, so if you look at it, out of the 80-90 points we are up, we have a 30-pointer negative impact coming from Reliance and Geo Finance. So in that sense, it's a strong move. We could be considering it a 120-130 move. What we need to see is if we follow up over the next 2 sessions. And importantly, the case is the same. 19,250, 300 on the downside is acting as a support. 19,600, 650 is going to act as a resistance. So for now, we are still stuck in that band. Once we cross this band, that is where a 300, 400, or even a 500 pointer moves come on the Nifty. So for now, waiting for more confirmation on the index. Broader market has continued to remain resilient. A lot of stocks have done well across the board. The mid-cap indices did not see much of a correction. Neither has the small cap, neither the Nifty 500 or the Nifty total market cap. So overall, the bias still remains extremely positive. It's just that the momentum on the large caps is missing.
Just want to bring up HDFC Bank as well for you, and if we can just fire the 1 month chart, because this has actually been a rank underperformer of sorts. Yes, it's come off considerably. It's now at 1590, so a good recovery is what it's made from the time a year back around April or so when the merger got announced. But since then, Naresh, or rather Mayuresh, haven't seen any fireworks in HDFC Bank. Why the disappointment now that everything is done and dusted and behind us?
So I think a large part of the street, Ayesha, expects to believe that with the merged operations now expected to come through and reported as consolidated numbers as well, the margins will probably start tapering off as we speak. But I think what the street is also not getting is that they also have an access to a whole host of funds which are low cost in nature. So I think the margin tapering might be temporary in my opinion. As we head into the next few quarters and as advances growth starts showing a strong uptick, where HDFC Bank, if you notice all the banking counter numbers, Ayesha, has been very, very conservative. Their management came on board saying that we do not want to probably overlend to the sense that they do not want to disrupt any asset quality pressures going forward in terms of unsecured lending. And entirely, I think with these two perspectives, I think the NIM contraction might be very, very marginal as we speak. And advances growth should head out as we head out into the second half and the next financial year should be extremely strong as well. Again, I think the base that they are operating out of purely in terms of their advances and deposit growth is pretty humongous as we speak. All the tech issues largely behind them. And even if valuations are at a premium, which it is always commanded, I think the second half numbers should be relatively better as we speak. And therefore, we remain optimistic on the bank. Anybody holding it should continue holding the bank.
Right. Okay. That's the take coming in on HDFC Bank. Has been a very, very meager move of about, I think, only 8% in the last 52 weeks or so. But let's get in the buzz on D Street. And Nuvoco Vistas is one stock which has been propping up across the dealing rooms as well. So let me take it across to Sharad, find out what the chatter across dealing rooms is this afternoon.
Well, yes, in focus we're having Nuvoco Vistas, and what we are hearing from the dealers is the buying being seen in some HNI as well as DI counters. Apart from this, looking at the stock, there is also a block trade which happened in the day's trade from the NSE exchange of almost 9 lakh shares. Recently, the company had come out with its Q1 numbers, and surprisingly, it was an outperformer as the industry had reported a weaker set of numbers. Apart from this, also the key DIs which are already invested in the company includes the names of SBI Mutual Fund, Mirae Asset Mutual Fund, as well as ICICI Pru Mutual Fund. The stock is also coming near its 100 DMA levels, and also the stock is still down by almost 25% from its highs seen last year. Looking at going ahead at the triggers going ahead, there is what the channel checks is suggesting is the pricing power is expected to come back to the cement companies, and especially as the monsoon season wanes out going ahead. This is coming in for the entire pan-India basis, but on a medium-term basis, on the other hand, there is certain pricing war which might be expected to intensify, at least in the western regions of India, after the acquisitions coming in from the Adani Group.
Okay, that's Nuvoco Vistas. That's across the dealing room chatter this afternoon, and why it's buzzing in trade as well. Just looking at the screen right now, so while Reliance continues to languish, and that is still down about almost 1%, we're back at that 19,400 print surely for the index, but Bajaj Finance is scaling up higher. A couple of the metal stocks like we were highlighting earlier, they're looking good. IndusInd Bank, ITC, you've got an Apollo Hospitals, Infosys is doing okay, TCS is holding up 1%, and then there is LTIM as well, which is up by about almost 1.5%. Of course, there's Persistent as well, which has sprung up almost 3.25% as we speak right now. That is one stock we should pick up because that's been quite the big buzzer in trade. 5,009 is where Persistent Systems is currently in trade. Mayuresh, just wanted to get your sense on IT, whether you're a buyer or have been a buyer in the decline that the IT sector across the board has seen.
So surprisingly, I think we are waiting for pullbacks, Ayesha. Very frankly, on the mid-cap, it will probably come through, but they're just not coming through. I think two perspectives here. One, I think the valuation obviously is on the higher side. If you probably look at the mean standard deviations over the last 5 to 10 years for the sector as a whole, and most companies within this sector, KPIT Tech, extremely optimistic commentary in a gloomy scenario as well, with strong client wins and order wins that they've probably reported, which probably ensures very steady dollar and constant revenue growth. At the same time, I think companies like Persistent, LTI, Mindtree, Coforge have delivered a decent set, and the management commentaries have been very, very optimistic. They do not believe that pricing issues will probably come through, order wins will continue. And as EBIT margins start normalizing after the first half, where wage hikes and the rest in terms of an increased allocation of operating expenses largely come through on the balance sheet, I think numbers should probably remain extremely stable even in the second half. So honestly, I think waiting for pullback on these stocks, because they are a little bit away from the basis that we've got in key pivot levels at markets with India, and a large element of valuation still not being in the comfort zone plays out with the extended boost that they have given. But we'll definitely have a look for pullbacks on stocks like a Coforge, a KPIT, or even a Persistent.
Sun Pharma, Praj. Let's look at it. Naresh, we've tracked Praj for a long time. I mean, is something special happening there? It's almost at 500 now.
So finally, the stock has started sustaining above that 450 mark. If you look at the last 2 years, there was always a lot of promise in the stock. The stock would make a marginal new high and again flip back towards the 300 mark. So it saw a very huge rally in 2020-21. But after that, every time we looked at it as a breakout, it flopped out. So again, we are seeing that pause around 460 to 500 levels, a marginal new high from those levels. But if it sustains 500, that could finally mean that a 2-year breakout doesn't play, and we could see a move towards 600, 650 also.
The one stock that let's just, bring up that one up for you on the screens has been Bharat Forge. And I think it's hit a record intraday high as well. Of course, news today being that the company subsidiary, that's Kalyani Strategic Systems, has secured an order worth about 850 odd crore rupees. Even the volumes are almost 1.5 times the 20-day average trading volumes on Bharat Forge. That stock has been holding up higher by about almost 1% odd. I don't know if we have snippets of the interaction that Nikunj had with the management over the weekend. We will just get back to you. But Nikunj, what's been your takeaway since you met the management in Pune?
See, Aisha, Bharat Forge has always been this whole play on trucks and car sales, largely trucks and very little in terms of dependability in terms of European market and US markets was high. They got hit because of COVID, and then they got hit because of war. And that explains why there is a deep cyclicality in the business. But the Bharat Forge of future, which is what the management is telling us, is going to be highly, it's going to be powered by different engines. And I'm using engines purposely because they are now in the business of making defense. They are now looking at moving manufacturing gear up, and they are really looking at flying high in terms of the aerospace. Bharat Forge of 2020 versus Bharat Forge of 2025, I think there would be a lot of difference, and the over-dependence on just one category, which is Class A truck sales, and the Europe and the European and the US market, I think is going to come down. The problem with Bharat Forge is that whatever I'm speaking right now, I think markets have realized that. And that is the reason why, even though numbers were okay and European subsidiaries are turning around, the stock has seen an enviable run up. It's all been this one side rally for Bharat Forge. So while the management will continue to deliver what they're indicating in terms of the changing profile, I guess somewhere from a market standpoint, the stock has seen a very strong run up. So let's play out a excerpt of our interaction with the Deputy Managing Director, that's Amit Kalyani. If there is a billboard which has just one mantra which you believe in, what would that billboard be?
I have one poster in my room that says, "What if everyone's wrong and you're right?" That don't follow the herd. But everybody follows what is easy to do. What is difficult to do is what makes you successful. Developing technology on your own. Spending 12 years in developing your own products when nobody gave you a chance. That is what makes you different. That is what makes you unique. That is what makes you a champion.
all set to close at the highest point of the day, almost at the highest point of the day. Global markets, let's look at them. What do we have there? A lot of green. Global markets are giving you a strong, support, so to speak. You have to rely on global cues to understand whether markets are peaking out or not, because in isolation, nothing's going to happen. I think the cue will actually come from the European markets. But two stocks, Kunal, which are worth revisiting again. Good old SBI and good old HDFC Bank. We're talking about a comeback. We're talking about the markets moving higher. But even ICICI Bank, so the three horsemen of the Nifty, the three private banks, two private banks and one large PSU bank, they're just not doing anything.
Yeah, and I don't expect anything very immediate into these stocks because, for example, SBI has broken below the 200-day moving average, and that's, I think, a concerning point for the stock price because, holding its long-term average is one of the more critical aspects for the trend to remain intact. But when, these stocks, they show signs of fragility or trend reversals, that's where these stocks, they tend to break those long-term averages. And I think SBI has already done that. So, even in the last 3 or 4 days, the stock has seen a bounce of 3%, 4%. But the bounce is unable to take the stock past above its 200 moving average on closing basis. And I think that's a concern which is emerging for the stock. I would expect SBI to actually go into a bit of a sell-off mode yet again, hoping the next couple of days, trying to retest at 550 mark. If in case the stock forms a double bottom, that's where we can probably expect that maybe the worst could be behind the stock price. But looking at the short-term price trend, it looks a lot more weak. Even for HDFC Bank, the stock has been just sideways at the 1600 mark in the last couple of days. But sideways has two kind of trends. One is either there is lack of participation, or even though there are long built-up formations, but it's unable to lift off the stock prices. Both of them, they indicate a bit of negative connotations for prices. So again, not too much bullish on either of these private sector banking names or SBI, at least in the short term.
Okay, let's get in some BTST trades as well. Going on that note, Naresh, what are your BTST ideas?
So first is a buy on NMDC close to a short-term breakout, stop loss at 117, target price of 123. Second is a buy on LIC Housing Finance, ex-dividend in the last two sessions, multiple tops at 430, 440, setting up for a breakout. Stop loss at 417, target price of 430.
Right, Kunal, what about your BTST trades?
Well, J&K Bank is something which I highlighted last week, so that's looking attractive even at current levels. It's actually moved up higher, about 93 mark. So traders could look at a revised target of 98. Stop loss could be kept at 90 for J&K Bank. And the second would be a buy on Bajaj Finance. That stock has shown signs of bullish engulfing pattern today on the chart. So buy with a target of 7,200 and stop loss could be kept at 69.50.
Okay. Naresh, why is SBI not going anywhere? Credit growth is strong, subsidiaries are doing okay, insurance market leader, credit card market leader, mutual fund market leader, but the stock is no longer the market leader.
Second, I think the expectations, Nikunj, in terms of numbers delivery and what they probably delivered, a little bit on the softer side when it came to asset quality. And therefore, I think the expected loan provisioning that a lot of these banks are probably providing at this juncture is something that has probably spooked the street as we speak. The second element is how much of a NIM contraction can actually come through. Because if liquidity is getting sucked out of the banking system, and if this continues as per the RBI directive, I think high-cost deposits are definitely going to hit the banking system, where the contraction of NIMs might be a reality. I think a lot of participants on the street believe that SBI's contraction can be a little bit worse off than what the street is probably anticipating. And third, I think in terms of the valuation perspective itself, when you compare a lot of the larger PSU banks, including State Bank, Bank of India, Bank of Baroda as well, I think the numbers were reasonably good, but I think valuations are also fair as we speak. So I think it's all about numbers, delivery and expectations, where the street believes that numbers can be a little bit muted for all these factors combined together. And PSU banks might probably languish a tad bit more because the aggressiveness that private might show in terms of lending, both secured and unsecured, I think the public sector banks might just fall a tad bit behind in that respect and perspectives.
Right, okay. That's the